Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, access this risk metric. Let's go ahead and jump in. So, one of the ways that I've said many times before that I navigate Bitcoin is to simply stick to the risk levels. The reason why I do that is because it's an admission by myself that I can't possibly know where the market is actually going to go, right? That is just sort of an understanding I think that a lot of people come to the longer you're in the market, is that the market is largely unpredictable. It's hard to know exactly what's going to happen, right? And it's very difficult to predict longer term shifts in momentum and whatnot. Sometimes they, of course, occur at the end of the post halving year. We also saw one last cycle where it sort of broke the cycle up and you had sort of an intermediate downtrend within the middle of a larger uptrend. And so what I've said before is, rather than spend so much time worrying about daily price action or weekly price action or even monthly price action, one way to navigate crypto is to use some risk metric, right? It doesn't have to be this one, but come up with something and say, you know what? We're going to look at Bitcoin's history. We're going to normalize its prior behavior between 0 and 1. And we're just going to set up risk levels and say, all right, well, when it goes down to this risk level, you can see where also that historically corresponded to. And if it goes up to a high enough risk level, that might compel you to sell. And so one of the interesting ways to look at this chart is to first, we have to understand that blue corresponds to low risk and then red corresponds to high risk. If we isolate only zero point 0.8 to 1 risk, you can see that at all prior market cycle tops, we went to the 0.8 to 1 risk span, which is not an area that we have visited so far. However, in 2019, we also did not visit that level, even though we actually got pretty close. We made it to the 0.6 to 0.7 risk span. The market then cooled off, and then we went up a bit later. One of the things that you may note here is that if you just simply look at the 0.7 to 0.8 risk band, which is where we already went, and you compare it to prior cycles, right? You can see that, and it's just sort of an interesting fact, right? That every time, every prior cycle, assuming you treat 2011 as its own cycle, considering it dropped like 80-90% or something, the year that we went to 0.7 risk, above 0.7, we eventually ended up falling a lot the following year, right? Which is kind of interesting because that would then correspond to 2025, which is not typically a year that you would necessarily expect Bitcoin to drop, considering that, well, the last three major peaks occurred in post halving years. And so you could also wonder, is it doing something like what 2017 did, where it kind of went into that zero point 0.7 risk band and then cooled off for a little bit and then went up again later? Or is it pulling something like what 2019 did, where it went up into the 0.6 to 0.7 risk level and then cooled off for a while? One of the interesting things is if you just highlight the 0.7 to 0.8 risk and then go look at 0.3 to 0.4, basically every time that Bitcoin went to 0.7 to 0.8 risk in throughout history, you can see that it did go to the 0.3 to 0.4 risk band within a few months, right? But I mean, we already technically did go below 0.5 risk on the wick when we went, sort of around that 53K level. If you actually go look at the Bitcoin risk table, you can see that when we went to 53K, right, we went sub 0.5 risk. Now, what I would say that the way that I think it makes sense to navigate crypto, and this is one of the things that I think gets people into trouble, is they assume that what is right for someone else is what is right for them, right? So for instance, this cycle, I've said for basically the last 3 years that I'm just going to stick with Bitcoin. And I'm going to acknowledge that some alts are doing well. I'm going to just be honest that most are, they just keep bleeding back to Bitcoin. And so while I've fought that fight that a lot of you guys are fighting out there, and riding some of those altcoins and trying to pick out the ones that are doing well against Bitcoin. And this cycle, I just said, you know what? I just want to have a calmer cycle. I just want to stick with Bitcoin at least until we get to looser monetary policy. And what's funny is when I said that back in 2022, I didn't know that it was going to take this long. I mean, I certainly believed in higher for longer. I said that, the Fed was likely going to go to 5.5% interest rates, but it's not like I knew that they were going to still be here, by September of 2024, which is what's currently being priced in as the most likely time for a rate cut. And so what's ended up happening is I've actually stayed just in Bitcoin a lot longer than I thought I was going to. I would have assumed that by this point I would have diversified out, more so into the altcoin market. But the reason why I never did was because monetary policy never changed. And so while this whole dominance rally has taken a lot longer than I thought, I think it's also safe to say that, it hasn't been wrong, right? The dominance of Bitcoin just keeps going up, right? So when you look at, at the risk metric, right? When I think about this, it's sort of an acknowledgement that I can't know exactly where monetary policy is going to go. I can't know how long it's going to take to play out, how long the rate cuts take to play out, that part of the cycle, and, when the last rate cut arrives, when QE comes back. I can't know the answers to those questions, right? I also can't predict black swans. There's geopolitical events that could occur. All I can do is look at prior Bitcoin cycles, acknowledge that this cycle is likely going to be different from all prior cycles, but use prior cycles to get some insight into the most likely outcome. And I think the biggest thing that has been the most predictable this cycle has just been Bitcoin reclaiming more and more market share, right? And watching, those alts bleed back to Bitcoin. And it's one of those things where, like, I've seen it happen before. It happened in a much shorter time frame. I've seen it happen before. I've seen people get, that at first they don't believe it, right? They don't believe that the alt can drop that long against Bitcoin. Then eventually they start to believe it. And then, at some point they just can't believe they ever thought the opposite, right? It's kind of a journey that I think a lot of people take in crypto, is going through that journey and then realizing that that's what, that's basically the way that most alts end up going. Not necessarily all of them. That's the way a lot of them end up going. So when you find one that is outperforming Bitcoin, oftentimes it's good. It's nice to be able to ride that for as long as you can, especially if you get in early in its Bitcoin uptrend. Okay. So the reason why I say all this is because, again, it's a reminder to myself that I can't possibly know exactly what's going to happen. Therefore, come up with something that has done a pretty good job in the past of identifying, ways in which you can navigate the cryptoverse by managing your risk. And again, the mistake that a lot of people come up with, that they make, is that they'll think like, all right, well, what's right for them is what's right for someone else. There's a lot of people who are probably fine buying Bitcoin every week from here for the next several decades, and they don't care. They don't care if it's at 0.1 risk or 0.9 risk. And the funny thing is, if you're here, I imagine you do believe in the long-term viability of Bitcoin, then you could argue that even those people will be just fine, right? Even if they do occasionally buy it at 0.9 risk, and even if occasionally they have to go through a pretty painful bear market where the market drops like 70-80%. But I think you would probably agree that even someone that follows that strategy 20-30 years from now, assuming nothing catastrophic happens, they'll still be doing just fine. Now, there's sort of other ends of the spectrum where, people want to get in at lower risk and take some profits at higher risk. And I'm one of those people, right? I don't really make that many trades within the cryptoverse. In fact, the main trades that I've made over the last 3 years was, and I mean, this is all, of course, public knowledge, or it's knowledge in ITC Premium, right? But I think I've told you guys as well is the only things I've really done in the last several years was I sold a lot of Bitcoin in the first peak. I also sold a lot of alts in the first peak in 2021. I then bought back in sort of mid 2021, and I did not sell at the second top. I did not sell back to USD. What I did do was as when the beginning of 2022 arrived, I sold a lot. Most of my altcoins I sold back to Bitcoin, right? Because I was like, look, guys, I don't, I want to preserve the social valuation of my portfolio, and I don't know, which of these alts are going to survive. I don't know, right? So I did do that. I traded a lot of alts to Bitcoin. And then in mid 2022, I traded most of my ETH to Bitcoin, right? Before the merge and right after the merge, right? And that's what I did. And then I also bought some Bitcoin down here at the low risk levels, mostly between 0.1 to 0.2 risk. And those, orders were filled a couple of times. That's basically what I've done, And other than that, I've just kind of been sitting on my hands, letting those positions just do their thing. And for me, this cycle, what I decided to do was buy Bitcoin up to the 0.4 risk level. So basically this, right? Up to 0.4 risk. That's where I bought Bitcoin. Now, some people are super risk averse, and they may only ever buy Bitcoin when it's below 0.2 risk. It's not necessarily the worst strategy. You just have to have patience, right? I mean, at some point, we're likely going to go back down there. And you never know, right? You never really know when it's going to happen. But that's one strategy, right? You buy every few years whenever it goes below 0.2 risk, right? You can see it happen in 2010 and 2012, 2014, 2015, 2019, 2018, 2020, and then 2022. And so that's definitely a strategy that I think you could go by. And then, sort of the reverse of it would be selling at the high risk bands. So for me, what I chose to do this cycle was just buy up to 0.4 risk, don't do anything between 0.4 to 0.6, and then skim some profits when it goes above the 0.6 risk level. And the way that I think it makes the most sense to do it is dynamically, okay? Now, a lot of people are very much into the idea of timing the top perfectly, and you sell everything at the top, and you're just a king. You know exactly when the price is going to peak. So there are people that I'm sure can do that or are much better at it than me. But for the people that cannot do that, or if you're unable to time the exact top, one strategy is to, and this is basically the same thing. It's just looking at it. You're taking the color code out of it and you're just plotting the risk on the secondary y-axis. Is to just say, all right, well, maybe when it gets to 0.6 to 0.7 risk, I sell 1/10 of my Bitcoin position. And if it goes to 0.7 to 0.8, I sell 2/10. And then 0.8 to 0.9, 3/10, and then 0.9 to 1, the rest, 4/10, right? The rest of the position. And that way, if you do get, like a 2019 style local top where it sells off then for a few months following that, right? If that happens, at least you took some profits, right? At least you took something off the table, especially after it was up 4x, which is exactly what happened in 2019. But you also don't necessarily want to sell everything at that risk level at like 0.6 risk or 0.65 risk, because, well, what if it does this and goes into 0.7 to 0.8 risk? So by doing it dynamically and only doing a small amount as the risk levels get extremely heated, by doing it like that, then you're basically saying, all right, well, now I have reason to want a potential drop, right? So for instance, if back when we were in March and Bitcoin was at 73K and it was in the 0.7 to 0.8 risk band, which we got there a lot quicker this cycle than we've really, gotten in all these in most of these prior cycles. If you looked at that, right? If you looked at that and you're like, all right, well, we're in the 0.7 to 0.8 risk level. We also saw gold broke out, just like in 2019, before Bitcoin had a larger pullback. And we also saw, USDT dominance. had sort of this test of the trend line once again, which of course lasts, when it's historically happened, it's marked some of those deeper pullbacks, right? So if you're looking at all that and you're thinking like, all right, well, there's a little bit of confluence, not only with the risk metric, but also with some of these other indicators. If you did skim some profits off the top, then there's part of you that wants to see it drop, right? So if you sold some in the 70s back in March, when everyone was screaming 100K it was going to happen before the halving, and a lot of people didn't even want to believe in the idea of a summer lull, then there's reason for you to think like, all right, well, if it drops, if like you sold 1/10 of your position, if it drops back into the 50s, then you could buy it back, right? Or you could at least feel good that you didn't just ride that entire move back to the downside, and then just hope that it reclaims that. One of the things I've seen happen over the last couple of months, and I'm sure a lot of people, I'm sure a lot of you guys have seen it too. There's a lot of influencers that will just bull post like crazy up here and then just say buy the dip down here, and then they'll bull post like crazy up here again, and then they'll just say buy the dip when it comes down there, and they'll just do the same thing, right? When it's up here, they'll just post the rocket emojis and the going to the moon memes, and when it's down here, they'll just say buy the dip, right? And that's not, I mean, that honestly over a long period of time, that's not like the worst strategy in the world, right? But it's also not really a great. There's also not necessarily a lot of risk management going on, right? It's just sort of shilling it as much as you can when it's going up, and when it's down, just hoping it bounces back up so you can continue to ride the wave. Again, that's worked so far this cycle. I mean, it has, and there's no telling exactly when that strategy is going to stop working. But the point with all this is to say, how can we know, right? How can we know if in Q4 we're going to go straight up to the higher risk bands, kind of like sort of a 2013 style move where you get a sort of a top in the first half of the year and then another top in the second half? Or what if it happens to be 2019 where you get a top in 2024 and then it ends up being a top for longer than people think, and then you get a drop that is then that drops until we get to QE and the last rate cut, kind of like what happened like last cycle. So the problem with this is that it's likely not going to play out exactly like 2019 or 2013 or 2017, right? It's going to play out different more than likely because you can see all prior cycles look different from each other, right? All these prior cycles look different. So we can't sit here and assume that this was going to play out like any of these prior cycles. It's probably going to be different in some way, right? In some way. And so rather than stress constantly about what's going to happen, because no one knows, right? I mean, people will pretend to know. And they can be right for a really long period of time, but at some point, everyone gets things wrong, right? The market humbles everyone. So it's impossible to know exactly when things turn back around, when they go the other way, right? Just like back in March, while there was a lot of evidence to suggest that Bitcoin would get a pullback, including, gold breaking out and hitting the trend line on USDT dominance, there was no guarantee. It's just all models are wrong, some are useful, and all models will probably be broken eventually. But rather than worry about everything, my goal is the strategy is to have a plan no matter what happens, right? So that if there is a pullback, like if Bitcoin gets a pullback again, and it does sort of that 2019 move where it puts in another lower low, right? You have a plan for that, right? Because then you're like, all right, well, if it does that, that means that it'll be going below the 0.5 risk level, right? And maybe you buy up to 0.5 risk or something, right? So you'd have a strategy if that happens. But if on the other hand, we get sort of a 2013 style move, you have a plan for that as well, right? And that's why I've said personally for me, for the last several years, to just stay Bitcoin heavy. Now, yes, I did skim some profits earlier this year. I was fairly transparent about that. But again, it was, it's sort of like the 2019 move, right? You just don't know. And skimming some of those profits, especially like, earlier in the year when everyone's super, super bullish, it can at least help you sleep at night, right? In case it ends up being a larger downturn that, no one really wants to talk about, right? And I do see a lot of people, only talking about the bull case. And I mean, it makes sense, right? Obviously crypto's had a lot going for it, and there's been a ton of momentum, and it's dangerous to fade the momentum. Um, but there are of course sort of the downside risks. And what I would like to see to get more confidence in sort of a Q4 move would be for Bitcoin to clear these highs up here. You know, um, I think that would be a very important step for Bitcoin going into Q4 would be to clear these highs and not just to take out this high, but to also take out this high back over here in March of 2024. Now again, you can look at prior similar types of moves in history and get an idea of what could happen. Okay? Um for instance, right? There's two examples that we could look at, I think that could be somewhat useful. When the QQQ launched back in 1999, it launched right around 48, which conveniently, when Bitcoin launched, was right around 48K, so it makes it an easy comparison. And then it rallied all the way up to 120. It even had a pullback below 50, around 53, 52 to 53 in August, right? Which is kind of interesting, right? I mean, it's kind of similar to Bitcoin in that regard. Even that larger pullback, and you can see that larger pullback even went below the bull market support band, just like it did for Bitcoin. And then it ultimately had that move, right? Where it had a crazy move to 120, and then it came all the way back down over here, to 19, which is kind of crazy to think about. But that's one way to look at it, right? But another way, of course, to look at it is to say, all right, well, this was March of the election year. And so far, Bitcoin's local top was in March of the election year. And we have not yet been able to take that out. And you can see that even over here, it was getting these rallies even as late as August, which is next month, which, by the way, is when the Fed is theoretically going 1 month where the Fed's theoretically going to cut rates, which means, if you've been following this channel, that's theoretically when alt Bitcoin pairs should finally break down, is 1 month before the first Fed rate cut, which happens to be next month. Or the cut in September. August would be the time where alt Bitcoin pairs might finally break down. So you look at the QQQ and you're like, well, hell, are we here? Are we still 6 months out from something like that? Like, are we still right here? Or are we already up here? Or maybe it's a combination, right? Maybe there's a scare and then you go up, or maybe you go up and then there's a scare. I mean, again, none of these cycles play out in the same way as they've done before. Even if we look at the S&P, they've always played out somewhat differently. So that's why I say, no one can possibly know exactly how it's going to play out. But if you follow a strategy that's not based on your emotions, then I think you can find more success, especially if you stick with it over a long enough period of time, right? And again, it's difficult timing tops and timing bottoms, right? It's not like I knew that Bitcoin was going to bottom at 15.4K. In the third quarter of 2022, I said there's likely going to be another drop in Q4, and there was. But I didn't know where the low was going to be, but I had my buy orders filled regardless of where they were, of where the low was going to be. Because I didn't know, right? There's no way to know. Just like there's no way to know where the top's going to be. But that is something that I use. And I've been using this model since 2019. And so far, it has stood the test of time. Even when it seems like it's not. And even in early 2021, and everyone was calling for 300K Bitcoin. I'm like, guys, we're not even going to see 100K this year, which was not even on the mind of a lot of people, right? The idea of not even going to 100K in 2021 was almost unheard of. My view back then was that we would go to 100K by 2023 or 2024, but admittedly, I also wasn't factoring in, an 80% bear market to necessarily come in between that. Now, once 2022 began and it was obvious that we were entering a bear market, I pivoted and I said, all right, these are tips for navigating the bear market, And this is what you want to do, right? You want to, alts are risky. They're just going to bleed to Bitcoin for years. They're going to bleed back to USD for at least a year. And it's just sort of tips to how do you navigate that once it's, obvious, more obvious, and that's what happened. Once you start to put in lower lows and lower highs, right? So again, it's impossible to know, but if you stick to the risk levels or something similar to it, that's one strategy to navigate it, right? That way, you don't even necessarily have to be on one team versus the other, whether you're on the bull team or the bear team. You're just sitting here over here saying, you know what? Who knows where it's going to go? But if it goes up, then, if it goes up, and if not, if it just goes up, because if it goes up slow, then the risk levels don't really change that much. It's okay for it to go up slow. It's when it goes up quickly. Those are the moves you want to take advantage of, right? When you get these types of moves, like these massive moves in short periods of time, that's the move you really want to take advantage of, not those shorter term moves. So for me, the way I do it is if it's 0.4 or below, I DCA. Last cycle, I DCA'd up to 0.5 risk. So this cycle, I just said, you know what, I want to take on a little bit less risk this cycle, so I'm going to DCA up to 0.4. And then take profits above 0.6. Skim some, right? Small amounts starting off, but if you get up into the higher risk bands, then larger amounts. But that's the way I navigate it. And that's my view. I know not everyone's going to agree with it, but one of the cool things about this is that there's not a single strategy that's going to appeal to everyone. You might be someone that legitimately buys all the way up to 0.9 risk, and then you just sell everything if it goes above 0.9, right? In the hopes that ends up marking the top. That works out most cycles, but there's, here's in the 2011 cycle, we did not go up to the 0.9 risk level, right? So maybe you start selling when it gets above 0.8 risk or something, or above 0.7. There's nothing necessarily wrong with just being the person that buys below 0.2 risk, and you just wait. You basically just put your chips in when that happens and just forget about it for a few years. That's also, I think, a valid strategy. But again, I also think that a lot of people want to just perfectly time the tops, perfectly time the bottoms, but I don't really think that's the best way to navigate crypto, because I think a lot of people are unable to do so. And I also think that a lot of people that claim to do so, right, a lot of times they're calling the bottom well before the bottom occurs, or they're doing it in retrospect, right? Or they call the bottom several times and then it occurs. I mean, I remember in 2022, back in Q3, a lot of people were already convinced the bottom was in at 17.5. And I was like, look, guys, normally we get a Q4 drop. And then we did, right? And then Bitcoin went to a lower low to 15.4K. But even in 2021 and 2022, right? It's very difficult to know exactly where those tops are going to be. And so what I'd say is, rather than stress about it, rather than stress about the news cycle, because I don't really even think the news matters. I think that the narrative follows the price, not the other way around. And I told you guys that back in March, that we're likely going to get a summer lull and someone's going to find a narrative to support it. And sure as hell, they did, right? They're like, oh, the German government's selling their Bitcoin and this is why it's selling off. But in reality, Bitcoin normally sells off into the summer months, right? In fact, it more frequently sells off into the summer than it doesn't. That's why we call for the summer lull basically every single year. And every single year, it's happened, I think, since we've called for it, right? I mean, it happened this year. Last year, it also happened. The year before that, it happened. In 2021, it happened. The last time that we didn't really have a summer lull was in 2020, and that was just after a major crash in March. So, again, there's always a narrative. You can always find a narrative, and you can worry a lot about those narratives, or you can just stick to a model, right? A sort of a risk model, and it doesn't even have to be this one, right? Just anything that you can come up with that takes the emotion out of it, and to just sort of stick to the quantitative side of it, and just be honest with yourself, and be honest with others, right? Just be honest with yourself about, your ability to predict the market. And I'm being honest with you and telling you I cannot predict where this market is exactly going to go. I've just laid out what my strategies have been, right? And staying Bitcoin heavy for a few years until loose monetary policy arrives, and DCAing whenever we're below a certain risk level. That's my strategy. Um, and there's certainly people that like taking on more risk than I do. There's nothing wrong with that. I mean, if you're someone that just buys, up to 0.7 risk, it's not like you're hurting right now. I mean, you're still doing very, very well. And that's the nice thing about Bitcoin. I mean, look at the chart. You can see what it generally does is go up and to the right over a long enough period of time. Now, that doesn't mean you don't have bear markets. You do, but that's what the cycle, how it generally plays out. So, and this is sort of what it looks like. I mean, this is this risk metric excluding just the top 2 wristbands, right? Only excluding those. So, if you look at time in wristbands, we've only spent in all of Bitcoin's history collectively, we've only been in the 0.8 to 1 wristband, two of them, for 98 days. In the highest wristband, only 18 days. The time we spend in the wristband we spend the most amount of time in is the 0.3 to 0.4 wristband. Now, we haven't actually spent that much time in it recently. We have not. In fact, you can see that, right? I mean, the last time we were in the 0.3 to 0.4 wristband was back in March of 2023. So it's been a while since we were there. Maybe it would be useful to create a chart saying time since this last wristband was reached. That might be a cool chart. I'm just saying that out loud so I can remember it later. If I just happen to be thinking about, different ideas, and I'll try to remember that maybe we can add that one for the next video that we do on this risk stuff. But yeah, so I mean, if you look at the current risk levels for Bitcoin, actually, let's just go over to the dashboard here. If you look at the current risk levels, so the instantaneous risk, 0.6 risk is basically back near the highs, right? 72K. 0.7 is all the way up at 91. 0.8 is at 113. Now, a lot of people ask me, is it possible for Bitcoin to go to this price, right? Everyone wants to know price predictions because those do pretty well, right? In terms of viewership. I saw some people asking me last night, like, Ben, why do you always put out your videos so late? Why are you publishing them at like 12 a.m. or 1 a.m.? That's not really the best time to get viewers. Guys, I'm not really chasing views. I'm not. I don't even monetize. I mean, I don't run AdSense, right? We just have this website. We have developers, right, that build it. But this is just, I'm not chasing all that, right? That's why I don't have the shocked face thumbnails and all that stuff. I like to keep it a little bit more rational around here if I can. That can get me into trouble a lot because markets are often irrational. And so if you're going with sort of a more rational approach and you go into these manic bubbles, then it's sort of mocked, like, oh, well, you didn't think Bitcoin could get to this price. Like, for instance, in 2023, I thought, and I was on the record, I said, like, I think the high, and this was when 2023 began, when we were at like 17K, I said, I think we'll go no higher than 35K in 2023. And then we went into the 40s. I think we went into the 40s. I don't even remember anymore. It's funny because back then it was like, it was certainly on my mind a lot. And now I can't even remember like how high it went. Let's see. It went into the, it went into the 40s. The grand scheme of things, it went above 35. It did go above 35. Who knew? I mean, it's not like I could possibly know. Price predictions are highly sought after by everyone. They want people to make them. But the issue with price predictions is that if you put one out and then Bitcoin reaches that price, what you're typically going to find people do is they're just going to raise their price prediction to a higher target because a lot of people do not want to flip bearish. They don't want to be the bad guy. So they'll just raise their price target. And if you pick a target that's never reached, then people get mad at you because they were waiting for that price level to sell. And guess what? You told them it was going to go there, and then it never made it there. So guess who they're going to blame? They're going to blame you. So when people ask me, is this theoretically possible? All I do is I consult the risk levels and I say, all right, well, let me see what's possible. According to the risk metric, right now, what is theoretically possible, if you go all the way down to zero risk, is 17K. That is still theoretically possible based on the risk metric. Now, with that said, we haven't been to zero risk since 2015, right? And that was a longer bear market because it was from November of the post-halving year all the way out until January of the pre-halving year. That was a longer bear market than the other ones that we've seen, and you can see it went all the way down here. So hard to know if that's going to happen, right, anytime soon. 0.1 risk all the way up to 0.2 risk, you're still around 20K. 0.3 is 31K, which is the prior sort of that breakout zone. 0.4 is 42K, which happens to be, you should know it, around the yearly open. 0.5 risk is 56K, which is where we just were. 0.6 is 72K, right? 0.7 is 91. 0.8 is 113. 0.9 is 137. And 1 risk is 164. Now, 1 risk is also not often achieved. The last time we achieved that was all the way back in 2017. And before that, it was in 2013 when we had 2 of those parabolic rallies in the same year, right? So when you get these cool-off phases like we're in right now, it's harder to get to those risk levels because the risk levels adjust, right? They adjust. So it's harder to get there. You really need sort of like back-to-back rallies to get there in a single year. So if you're going to ask me like what's theoretically possible, I would say whatever is within the bounds of the risk levels is theoretically possible because the risk model is based on prior price action by Bitcoin and assuming diminishing returns, right? So you might say, well, what about diminishing returns? Right? It's assuming there's going to be diminishing returns. So yeah, right? I mean, this has to be like an acknowledgement that, and that's the thing, like people say, well, no, it can't possibly go to that price, whether it's to the downside or the upside. Guys, the reason you're here is because Bitcoin is volatile. If it weren't volatile, you probably wouldn't be here. You're here because it's very volatile and you want to take advantage of that volatility. So yes, if you're looking at it and you're like, well, how can it possibly go to that price, whether it's to the downside or the upside? You have to remember, that's what brought you here. Have you ever noticed how a lot of the altcoin communities die out after a while because the price of their token just keeps dropping, right? I mean, think about it. Think about what altcoins were around in 2021, and so many of them, the prices are closer to their lows in 2022 than they are to their highs, and it just gets kind of depressing after a while for those altcoins, and people just move on. They go on to something else. Because while we want to believe that everyone's here for the fundamentals and for the tech, that's a lie for most people, right? People are here because the price goes up. If the price were to just start dropping for the next 2 years, I imagine people would leave. If the price were to go up for the next 2 years, a lot more people would come into the Cryptoverse. So at the end of the day, everyone's here to make money. Because when people stop making money, they tune out. And that is best shown with something called the social risk, right? So the social risk is something completely different than what we just talked about. It's just looking at retail involvement. And guess what? No one's here. Which is absolutely fascinating to me. That you have Bitcoin at 67K. Imagine if you told someone that Bitcoin would be at 67K and it'd be a ghost town on crypto Twitter and on YouTube. It'd be a ghost town. And if you're wondering why Bitcoin dominance just keeps on going up and to the right after all this time, after all the gurus' failed attempts to call the top on, it just keeps going higher. If you wonder why, it's because no one's here. There's only one Bitcoin. There's 20,000 alts. I don't even know how many. Probably more than that. And one of the most common misconceptions that people have about crypto is that, well, if you print more and more alts, then the dominance of Bitcoin has to go down. That's not true. You're spreading out the liquidity that goes into the altcoin market thinner and thinner. That's all you're doing. You're not taking away capital necessarily going into Bitcoin. You're just taking away capital that would have gone into another alt. So the reason why dominance keeps going up and to the right, the reason why Bitcoin keeps taking more and more market share is because retail is just not here to bid up the alts that are in a way that keeps pace with Bitcoin. I'm not saying that alts haven't gone up. They have. It's just that they're not keeping pace with Bitcoin. And the reason is because there's so many alts. And there's only one Bitcoin. And that's why, right? And of course, that's not the real reason, right? I mean, that's sort of a secondary reason. The real reason is because of monetary policy. But again, monetary policy influences the social interest, right? High rates and quantitative tightening, people are having a harder time just getting by. So they're not as interested in crypto. QE and lower interest rates, people take on more risk. And people come back into crypto. And then alt season arrives. But see, everyone keeps trying to front run alt season. But guys, when you talk about alt season, and I've been warning about this since for 3 years now, right? The alt season that you want is when Bitcoin dominance is dropping like it did in 2017 and in 2021. This is not what alt season looks like, right? Just like this was not alt season. That doesn't mean that alts don't go up at all. They do. It's just if you're thinking about alt season, you're thinking about a time when alts are basically going up hundreds of percent week after week after week, where they're durably outperforming Bitcoin. But in order for them to durably outperform Bitcoin, you need retail to come back. And if retail's not back, right, if they're not back yet because monetary policy hasn't shifted, then Bitcoin dominance goes up. And it just keeps on taking back more and more market share. And the liquidity in the altcoin market keeps on going back to Bitcoin. That's why I just stuck with Bitcoin for this cycle. But again, my plan when this cycle started was to not just stick with Bitcoin and only Bitcoin for this long. But that's what the market ended up giving me, was a period where it has taken far longer than I think many people would have thought for the rate hiking cycle to play out, and for the pause to play out, and for cuts to finally arrive. But that's why I'm saying, it's impossible to know exactly what's going to happen with monetary policy, with geopolitical events, even within the narratives within crypto. I mean, how we got the launch of the spot ETF for Ethereum coming up. And who knows how that's going to affect the market, right? If it follows what Bitcoin did, it'll spike up and then spike down afterwards. But the market's constantly evolving. Maybe it'll do something different. I don't know. But that's kind of that's how I navigate the Cryptoverse. It's just one way. It's worked for me. It's been valuable for me to navigate it like this. But I acknowledge that there's other ways out there. There's other risk metrics that people have developed that are probably equally as good. This is just one way. And it's also, again, an admission of the markets humble all of us over a long enough period of time. So I stick to the risk metric. You will see my commentary on a day-to-day basis talking about what Bitcoin might do, whether you're going to get a summer lull or what's going to happen. But I don't trade that stuff, right? I don't. And I try to make that as clear as I possibly can. I don't trade that stuff. I just stick to the risk levels. Nothing more, nothing less. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And if you want access to that risk metric, check out the sale on ITC Premium at intothecryptoverse.com. Link is in the description below. You can also check the pinned comment. And I will see you guys next time. Bye.